All right, in this video, we're going to work on Chapter 6, Workbook Exercise AP2B. Okay, so this problem is very similar to AP1B, and that will be preparing the financial statements. And we do have some considerations regarding capital potentially in terms of contributions like we did in AP1B. But the one thing we're going to do differently, I guess, the addition, I should say, is we're going to be preparing the adjusted trial balance, whereas AP1B already had the adjusted trial balance ready for us. And we're going to do that through the completion of our adjusting entries spreadsheet here. Okay, and it tells us all of the adjustments that we need to make here. But I do want to start here with capital, because again, it has us kind of work backwards into understanding what the contributions were during the year. And what it tells us here is that the balance of owner's equity at the beginning of the year was $86,750. And then here you see it's $96,750 at the end of the year, essentially, before we consider the withdrawals or net income. So what that tells us basically is that there was $10,000 of contributions during the year that's included in this number. And that's what they're indicating here with that information. And then we can do a similar thing like we did last time, just to bring in this beginning balance. And then I'll put in the contributions here as well, just so we have that ready to go once we start working on all of the financial statements. Okay, let's go ahead and put in the adjusting entries into our spreadsheet. So we have annual depreciation on equipment totaling $9,000. So remember, depreciation entries include a debit to depreciation expense and then a credit to our contra asset of accumulated depreciation. So those are the two parts of a depreciation expense journal entry. Accrued interest on the notes payable is $500. So let's go to our interest expense. And then we have interest payable is going to be our credit, our liability there associated with the interest that we owe. This tells us office supplies on hand are valued at $2,300. So we see here that it's at $10,400 before we account for all the usage, essentially. And so we need to bring the balance of office supplies down to $2,300, in other words. And so we can do that. We're going to credit this asset to reduce it. And we could just do a little formula in here. And we don't need the parentheses, I suppose. But what we can do is we can say 10,400 minus 2,300 is 8,100. And then you can see here we had a debit balance to start. A credit reduces the asset, and we end up with 2,300 as the ending value, which matches our actual physical count that we went out and did and how we figured out what the value was that we had on hand at the end of the year. Okay. And then finally, the annual insurance policy was purchased on December 1st, 2017 for $21,900. So we're going to need to look at prepaid insurance, and let's take a look. So December 1st, 2017. So we're at November 30th. Let's do a little math here. Let's do a little analysis. So if the balance of our annual insurance was purchased, and it says annual, so we can take that to be 12 months, was purchased on December 1st. I'm going to put in December, and then we can just go, I'll spell it out so Excel will help us. So if we look at the breakdown here, December, this would be 2017. and then the rest of these are 2018. And now we are at the end of the month here on November, October, November. So, so these are all the months that have passed. Okay, so November will be our last month. So essentially what we're saying is this, that we purchased, our prepaid insurance started on December 2017. And so this is 12 months later, essentially. So if we take this number, divide by 12, you can see 1825 is the 1/12 of that 21,900. So in essence, what we're going to be doing is just using up the last month's worth of the prepaid insurance, because we're soon going to be at December 1st, 2018, and we'll have to renew that policy, essentially is what's going to happen. So the beginning debit of that asset reduces, that's going to reduce it to 0. We have insurance expense of 1825, and make sure we've got everything in here. Oh, you know what? I think I might have, let me see here. I think this is, the wording on this actually messed me up a little bit. Annual depreciation equals 9,000. We're at 8250. So I think what they're trying to get at here, and I think that's a little confusing, but they want us to, they're saying that when we add the current month's depreciation expense, we should end up at 9,000. So not 9,000 addition, but 9,000 ending balance. So 750 plus 8250 there gives us 9,000. A little tricky. Okay, interest payable. Let's go ahead and do our auto sum. Let's summarize all of the cells in the adjustments column. Oh, we need our supplies expense. I'm just going to link that over to the reduction in the asset. Okay, now we balance out. I think we've got everything captured there. So now we just need to go through and bring over. So we're just adding across debit plus debit, or if it's a debit and then it's a credit, it will reduce it. But no adjustments there. We already captured that one, and we put this in. It's going to be 0. So we had a debit of 1825. Then we credited that to bring it to 0. We've got a credit balance of accumulated depreciation of 108,000. Credit balance to accounts payable. We now have a credit balance and interest payable of 500. Notes payable 140,000. Capital, withdrawals. Most of these are not adjusted, but now we have some adjustments. We're increasing the expense. It has a debit balance, and we're going to increase that debit balance. Okay, and then I'm just going to copy these formulas and paste those in, because that's a quick, easy way to capture the additions above. And we get 759,250. And now with this all prepared, we can go through and put in our information. And this one, I looks like I left in some of the formulas here for the things above, and that's fine. I'm just going to leave it so y'all don't have to redo that. Where's my, I just grabbed the wrong one there. Service revenue, yeah, make sure you grab the right account. And then again, we can just link into here, drag that down, supplies expense, and our total expenses become 324,500. Subtract expenses from revenue, and we made net profit or net income of 58,000. And we can just drag that down right away just to have it there. Oh, you know, I put this in the wrong spot now. Maybe you all saw that when I did it. That should be on the investment part there. And then withdrawals is going to get our 60,000 of withdrawals there. So we have the beginning balance plus the investment plus the net income minus the draws. Ending capital is 94,750. And then we're just going to go through and finish out our balance sheet. Let's pick, oh, I got to do that little fix there. And then let's bring in everything there. Oh, you know, this, whenever you see words that run off the cell basically like this, you can double click the edge of the column and it will automatically move your balance sheet over to some, you know, or your, so I should say the column will automatically resize to cap to be able to fit what's in the space there. So let's do that. And then let's bring in all of our ending asset balances. So 266,750. And then on the, that same problem. I think that's the, yeah. And just for the sake of being proper, I'm going to highlight the bottom and top of each of the cells and just put the dollar signs in there. Okay, total liabilities becomes 140,000, or we can carry over our ending capital, add our liabilities and capital. Uh-oh, we're missing something. Let's take a look and see what we are missing here. Oh, I think I grabbed the wrong thing. That looks kind of high. Whoops, yeah. So that's why we do our check figures at the bottom to make sure that you grab the right cell. You might have saw that when I did it. It said, oh, you grabbed the wrong thing. But I put the accumulated depreciation in for accounts payable, but not a big deal. You can just easily correct your links. And once your asset, you know, you get your balancing and everything's accounted for, then we're going to be looking pretty good. All right. Well, thanks, everyone. I'll see you in the next video where we will work on AP3B.